Now let's move on to the actual process of underwriting credit appraisal, where you are determining the eligibility of the individual or the individuals who applied for a loan. It doesn't matter whether the property is selected, because what you are doing is deciding in principle whether the customer is eligible for a loan, and if so, for how much. Now remember one more thing here. The how much that you have decided at this stage ultimately also depends upon the cost of the house that the person is buying or constructing. So he has given you an indicative idea that he is buying a house worth 100 rupees, and therefore you are giving him a loan of say 75 rupees. If for some reason the cost of the house that the individual finally chooses falls below 100 to say 85, you might not be able to give him 75, because there are regulatory limits on what is the loan to the value or the cost of the property. So although the person or the persons are eligible, you cannot give that full loan, because it is higher from a loan to the cost of the property perspective. So now let's look at the actual process of appraisal. Again, remember two things here. One, it depends upon the profile of the customer. Are you self-employed? Are you employed? Are you a professional? Are you a businessman? Are you a trader? Are you a vendor? And the other thing you have to remember here is that supposing there is a husband-wife and one is employed and one is self-employed, you actually have to do two different ways of doing the appraisal. What you need to do, you have to look at the policy module that we will talk about. Here we are talking of a process. So let's now look at all the various stages that go into the appraisal, and the next piece, which is the double checking and the verification of the appraisal itself. Now once we've got the documents, we've got the co-applicant's papers, the file is logged in, all mandatory documents required at this stage submitted, the file is logged in, a reference number or an account number created, and the file moves on to the appraisal process. Like I said, the appraisal process is purely an in-principle process required to determine loan eligibility. Now the first thing that happens here is that a credit report gets pulled from one of the four bureaus. Remember, if there are more than one applicant, like there are two co-applicants, then a credit report will be generated on each of the three co-applicants. Once that is received, the underwriter, the credit appraiser, by whatever name called, will review and study the credit report and see whether it's positive or it's negative. Now, what is positive and what is negative will be defined in the credit policy of the company. So what might be a negative for a company might not be such a big negative for another company that is lending to the persons. So once, according to the policy, if the file is negative, again most lending institutions have two choices. Either they reject the file automatically and straight away, or there is a discussion with the customer and the person whose report is negative to determine and understand why is it that there was a problem with the report resulting in a negative score or a low score. If you are satisfied with that answer, then the file moves on. If you are not, you reject the file and you send all the documents back, and if there is a policy to refund some or all the fees, you also refund the fees, and that's the end of the story. However, if the report is a positive, or after a negative report has been adequately and satisfactorily explained, then the file moves on to the next stage. Now, some companies or some lenders will do a welcome call and thank the person for applying and all that. Of course, this has nothing to do with the appraisal per se, it's more a feel-good factor for the customer. The opportunity at that point is also to remind the customer what are the documents that have yet to be submitted, which will help move his file forward faster. Where did you get that list as an underwriter? Well, at the login stage, remember we talked about documents not received as yet, property papers. Again, at that stage the customer might say, I still haven't identified my property, and that's fine, but he is reminded that he is supposed to submit a set of documents. Now you have to do what is called the actual credit appraisal. Before that, you do what is called a fraud control check. Now, where do you get these fraud control checks from? Two ways. One, internally, companies have people who are experts at reading printouts, forms, documents to see whether it's a genuine document or a fraudulent document. Personally, I have seen fraudulent credit reports generated by the customer through some not very correct method, so that it looks like he has a better credit history and a better score than what his actual report says. These fraud control unit team members are experts at identifying such fraudulent documents. Bank statements printed on a printer at home showing numbers which are not the true reflection of the bank statement. And then there are certain websites you can go to. There are fraud control units set up by the bureaus. The bureaus have what are called hunters. Hunter is a product by one of the bureaus which allows you to report and therefore access anybody who has done a fraud in the system earlier. So for example, if somebody is given a wrong PAN card, that data will be reported and will be available, so you know that this customer has done a fraud intentionally, and therefore you might want to be careful or reject his file. Now once the fraud control unit has done its work, the file moves on to the actual appraisal. Now the actual appraisal consists of course, making sure all the documents are there. What documents to look at and how to look at them, not part of processes, that's part of policy. If there is need to review the credit report, that is done here. If there is a need for a field credit investigation, which is actual visit to the person's office, factory, unit, shop, or even his place of work, like he's employed, then that can be done here. However, many times the phone call is often adequate, especially for what are seen to be more comfortable cases or safer cases. That phone call again establishes and verifies some of the information that has been given by the customer or customers. Remember, if there are two people working, you need to make two calls or make two visits or make one visit and one call. Now once you've done that and you've looked at the numbers, you've looked at the ratios, you've looked at the determining the income amounts, etc., you start calculating the loan eligibility. How to calculate that? Again, not here. That will come in the policies. Once you've done that, you can have a discussion with the customer, or you are now ready to recommend this file for sanction. You've determined the loan amount, all your queries as a lender have been answered. If you are a borrower, this is probably the time the lending institution will get back to you and ask you certain clarifications on the documents or information that you have already submitted. Once all this is done, you then recommend the file, and you now know as a borrower that your file has gone to the next stage, which is to be double checked and to sanction the loan. Again, remember, it's still a sanction in principle. The property documents may or may not be in here. If you have submitted your property documents by now, then the lending institution parallelly will set off two other processes. One is the legal process and the second is the technical process. Now I am explaining it to you at this stage on the assumption that you have submitted the documents in this stage. If you have not, the process doesn't change, it will just happen later when you actually submit the documents. Of course, once you have the documents and you have identified the property, you should submit the documents as soon as possible so that the disbursement process is not slowed down.